What is up, you guys? Welcome back to my channel. Nikki here, and in today's video, I'm going to be going over my entire $25,000 dividend portfolio, show you guys what I hold, show you my spreadsheet, the whole shebang, and you already know the drill. Let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the
Now, I want to mention something real quick that I actually touched on in my last video that I uploaded, was talking about portfolio value and kind of that whole thing. The next portfolio overview I was going to do was 25K, and I had hit that about a month ago, and then we kind of pulled back and I didn't hit it. Then about a week ago, I hit it again and almost hit 26K. Never got to film the video because I was sick. And then now that I'm ready to do this, we pulled back. The market's been poopity doop doop dooping, and I am down now around 24,500 whatever. But you can see right here that I did hit it, okay? At one point, I was there, I was chilling, so I'm not lying. But we're gonna go over my portfolio, and what I'm going to do is just hop directly into my spreadsheet and go from there, do a little screen action, maybe grab a Coke, a snack, maybe a Pepsi, because you know I love that. I am a shareholder, so greatly appreciate that. But I'm pretty proud of my baby, okay? I have 40 holdings in my portfolio, and some may say that's a little excessive. Some may say do what you want to do. I kind of fall into that category. I have learned a lot through my dividend investing journey, so if I do catch myself never adding more shares of something or not seeing myself eventually doing that, then I will sell it and put it into other companies that I really do see myself wanting to add and grow with. So that being said, let's hop straight in. Here's a spreadsheet. If you're kind of new here and you might not know what this is Andre's spreadsheet, okay? I pay the $8 a month to have it because it makes my life easier. Kind of annoyed that I do that because I just am over those guys. But anyway, I do use this, and this is where I kind of keep updating and kind of keep myself on track with what I need. And I will show you these other tabs down here in a little bit because they are extremely helpful. Let's go ahead, let's dive in here. So my cost basis on my portfolio right now is about $19,000. The market value is about $24,238 as of recording this today. But like I showed you, I hit the 25. Okay, so we're going to go over it. I'm up almost about 28% overall in the portfolio. I am down significantly in a few positions that you will see and that you can already see. But let's start at Apple. So I have 14 shares. My average cost is almost 99 bucks. AbbVie, I'm at 8 shares at an average cost of 108.68. Alaska, only 5 shares, an average cost of 56.74. I'm down actually 8% in that overall. Not good, but I will continue to add them. I do think at some point airlines will come back, and I like this one the best, along with one other that you will see in a minute. American Express, 6 shares for $91.91. No, $91.90 on an average cost. Best Buy, 3 shares at $101.29. Citi, 10 shares at $48.60. Comcast, 8 shares, $41.77. Cisco, 10 shares, $43.99. Now these two, like, I haven't added to them in a very long time, but for some reason I just don't want to let go of them. And I feel like it's a little bit sentimental because they were like the first 2 stocks I ever bought when I started my journey. And so I'm just like kind of keeping them, and I'll add to them hopefully maybe eventually, but we're just holding on to those. Then we move down here to CVS, 6 shares at an average cost of $67.73. Discover Financial, 5 shares at $49.52. Home Street Inc., 8 shares at $40.39. Invitation Homes, 3 shares. I need to up that a little bit, $39.59. JEPI, the monthly payer that a lot of people were really gung-ho on, 5 shares at $61.77. J&J, 3 shares, $148.51. JPM, 4 shares, $92.71 a share. Coca-Cola, I kind of forget about Coca-Cola, can't lie. 12 shares, $46.54. Lowe's, 2 shares at an average cost of $177.20. Oh yeah, I forgot. I mean, obviously you can see JPI I'm down on. Not horribly, but I am. But then the next kind of worst one here is Southwest. I have 5 shares at $50.53. I'm down 13.22% overall. I'll keep adding though. McDonald's, Mickey D's, McBag, 2 shares, $190.20 average. I need to be adding more to this, but it's just when we cross the $100 mark in a share price, it gets hard for you, girl. Okay, it really does. But this is one I know I want to get to 5 shares this year. Medtronic, 4 shares, $103.91. Microsoft, 2 shares, $186.57 average cost. I did in my kind of decently most recent video, I asked you guys because I thought about selling this and putting that money into other things I really like Pepsi or Stag or, you know, something else I actually really want to keep adding to, like heavily right now. But y'all said, girl, don't do it. So I will not do it. Luckily, we've dipped below the $300 mark. So maybe I'll look to add if I can. But like I said, when it's over a certain price, it's hard for me to swallow. So we need to split, Microsoft. Can we split this up, okay, please? Then next area, energy. I have 5 shares at $77.64. I am down currently overall in my position here, 3%. But then NRZ, 40 shares at an average cost of $9.05. Oh, Realty, 8 shares at an average cost of $61.62. OKE, 20 shares. This one was one I got hot off the bat when I first started too. $34.67. I'm up almost 72%. Now that's like so nutty to me. It's crazy. Pepsi, I'm 6 shares at $132.53 a share. I need to get that to 10 this year. Like that's a goal. Pfizer, 10 shares, $37.75 average cost. Procter & Gamble, 1 share. Low key, I always forget about this guy. Like, not sure why, but I do. Average cost of $135.10. This is another one that I'm kind of like, should I sell it? Take the money and put it in something else. Can you let me know down below if I should do that? Because they're solid, like super blue chip, solid dividend paying company. I just don't know if I see myself adding more. Maybe I do. I don't know. Help me out. I just don't know. Peloton. Now, this one has slapped me in a half, you guys, and I was super bullish on it. And quite frankly, I still am. And I still plan to probably cap this out at 10 or 15 shares, but I have 9 shares at an average cost of $39.30. I am down almost 33%, which is a lot. Like I'm kind of kicking myself like I didn't sell it at 170, whatever, but I'm long-term on these. Like I wanted to hold this to 3, 5, 10 years anyway. So I'm going to do that. And quite frankly, it's not that big of a deal to me. So that's what it is. Raytheon Technology came in after that, 8 shares, $64.86. And you guys, after I go through this list and kind of show you, so you can kind of see this overall spreadsheet, I will dive into a graph that kind of shows you a much better visual of kind of like how my portfolio looks. So if you want to skip, there's timestamps here. You can go to that section of it if you're not chilling and just hanging out with me reading this. Okay, if you don't want to read this, I'll see you over there with the graph. So then next is like one of my most favorite at the current moment. And I feel like if I had $1 for every time I said, this is my most favorite, I wouldn't have to be investing anymore. But that's going to be Starbucks. I have 8 shares at an average cost of $103.71. I am currently down, so I will be looking to heavily add to this position. I know that it came down under 100 and I was trying to scoop it up. I will continue to do so. And even when it goes over 100, I will continue to do so because this is long term. Then my favorite ETF, SPYD, I have 20 shares at an average cost of $32.93. And then SPYG, which is the growth version ETF, 7 shares at $39.23. SPYV, which is the value, which is essentially these two like had a baby. That's what this is. 7 shares at $32.68. My favorite REIT as of right now, Stag Industrial, 14 shares at an average cost of $34.38. Golly, AT&T, 35 shares, average cost of $30.22. I am down almost 12.5%, but I will continue to add to this. I think, and I did an entire video on it, and if you're interested in my thoughts on AT&T, the spinoff, the dividend, what's going on, I will link it down in the first comment below. You could check it out when you want to. But this, you guys, like I'm going to try to get this to 50 shares as quickly as possible. I could probably do that in the next 3 or so months. We'll see what happens there, but I do plan on continuing to add it at least to 50, and I'll kind of maybe reevaluate my position because I know I am pretty heavy in it. Then I have Target. I have 3 shares at $104.47, and I mean, this is just another one of those ones that like the price has gone up so much, it's hard for me to spend that much on a share. So I need a split because I'm up almost 105.5%. That's just crazy. Toll Brothers, after that, I have 4 shares at $58.12. Verizon, 14 shares at $55.87. Average cost down 5% in this one. Another one I will continue to add. And then another quiet favorite of mine that I don't talk about enough, but I do talk about it. I've done a video on it kind of a long time ago. Maybe I'll redo it. But that's Waste Management, 7 shares at $109.78. Now, let me dive into the actual kind of like graph that's way easier to see, and I'm going to show you how I kind of evaluate this and what I do to kind of plan my next steps with what I'm going to invest in. All right, guys, so here's kind of the visual that I like to look at a little bit more because it breaks down my positions and it also tells me at what percent of my portfolio that they make up. Now, right off the bat, you can see that this huge fat blue one is Apple at 9.2%, and I like to keep things around the 4 or 5% range if I can, but Apple is one that I am so freaking obsessed with. It is hands down my favorite, and I know I say that a lot, but this is my favorite company ever. So the fact that it's 9.2%, I'm not mad at all. Quite frankly, it will probably get higher. It's dipped back down. It was like 180 something. It's back down to like 160 at this current moment. You know how the market goes. It could be different in a couple seconds, but that's what I'm looking at for Apple. But then you can kind of see these two fat pieces here, which is AbbVie at 4.4%. And if you watch my 2022 goals, you know a goal of mine is to add 1 share of AbbVie every single month of 2022. 2022. So I should be adding 12 shares this year, which is going to increase that percentage, obviously, and I'm okay with it because it is a great paying dividend company. Then Waste Management, a silent killer that I mentioned before, is at 4.3%. And then this one right here, actually American Express at 4.3%, is something that kind of was insightful to me because I haven't added a share of American Express in quite some time. But then pretty much everything else is around the 2.5 or 3% mark. I know OKE is close to 5% because I, had kind of a disastrous problem with that back in March of 2020. I bought it at pretty highs and it crashed down to like $19. So I just kept adding and adding to average cost my way down. Turned out to work out really well for me. It pays a great dividend. Pepsi, heavy, but I love it. It's one of my favorites. Like, I've said that before. SPYD, my favorite ETF, is a high one in my portfolio. So this just kind of gives me an overall view of like, if something's alarming of like, wow, that's taking up a lot of my portfolio. I don't want it to be that heavy in there. But like I said, Apple, I'm cool with it. And it also shows me the other end of the spectrum. Like, okay, like I'm super low in a lot of these things, like Home Street, 1.7%. I need to kind of add to that. J&J, 2%. That's a great company. I should add to that. Same with JPM. So Lowe's, same thing. I'm obsessed. But the problem is, Lowe's is freaking expensive and I've already talked about that. So it's just a way to kind of keep an eye on things. And I like this visual a lot better. Then we have this kind of sector graph that shows me kind of just like what sector of the market that I'm really heavily in. And you can see my telecommunication is 16.4%. Like that's pretty heavy. I would like to see it less than 10 because like look at utilities, 1.2%. And I feel like I've asked you guys about utilities before, but if you could throw some new utilities down there for me that you like, that pays a really good dividend, please let me know. But I'm not mad at this per se. Like I think technology is kind of low versus how much Apple I have, but that is what it is. Real estate heavy. I like that. I like that a lot. Investment trusts or mutual funds, that's kind of a lower risk investment for me. So I do like the fact that that's pretty high. Energy's a little bit higher, but that's the OKE thing. So like it makes sense as to why things are, but these graphs really help me see a visual of like, okay, I need to kind of pump my brakes on maybe telecommunications. But in the same breath, I know I'm down in AT&T bad and I want to get it to 50 shares. So I know that that's going to actually increase probably before I even everything else out. $25,000 is pretty freaking solid for me. I mean, I've been doing this since 2020, like kind of in March, kind of when everything started to tank was really my entry point, which has helped me a lot in this whole situation. But I'm super excited about that. My goal for 2022 is to hit 40,000. And I mentioned in a prior video, like you guys, when we're in the stock market, when we're investing like this for the long term, there might be a period of time where you hit 50K, 100K, maybe your goal is 10K, but then the market has other plans for that year, that month, that week, whatever. And you fall back down into prior milestones or prior things that you had. And like, that's just the name of the game. So if someone's like, oh, I have a $250,000 portfolio. Okay, brother. Well, like in 5 years, if we're in a bear market or we have a really bad recession, he might crash back down to 75K, 100K. I mean, it's like that happens. And so don't get discouraged. Just continue to put money in there. Someone like me, I'm 28 years old. I plan to have this for at least 30 years, if not more, living off dividends, using the money, using that income. And so if I have a 5-year period of a recession or a bear market and things are crashing, which I think, honestly, we might get to the point now where that happens. We're looking at insane inflation rates that are predicted to go up 1% a month. We're looking at insane interest rates because we've been at zero for so long. Things are messy right now. And we had a Band-Aid over it for a couple years. Over the next, few months, maybe a year, 2 year, 3 year, you may see really lows in your portfolio. Just keep adding to it. If you are my age, if you're around my age, and you plan to have this for that long anyway, historically, the facts are you will recover and then some, okay? And historically, the facts are if you sell, if you panic, if you get rid of stuff, or you don't buy in at low points, you're gonna miss out on a lot. So that's just my 2 cents. My next milestone that I will hopefully hit decently, if the market can work with me, is 30K. I'll revisit, I'll show you if I sold things, all that kind of stuff. Every kind of 5K, 10K, I will make a video like this, but I'm just excited to hit this one, and we'll see where 2022 takes us. But you guys, if you like making money and having a good ass time, you should consider subscribing by hitting the NB in the bottom corner or the red subscribe button. You already know, if you made it this far, you are my favorite people in the world. Come here, you know I love ya. If you guys are interested in my 2022 investing goals, you can watch this video right here. And you guys, I will see you in the next video. Bye guys.